Okay, what's going on? What's going on? Today is Sunday, February 9th, 2025. And what we're going to look at is an end of the week review from last week. So, some trades that we took, some ideas we took on swing positions, some ideas that we actually took on futures positions. Um, and a little bit maybe into dollar. Actually, today I'll probably stick with just some of our positions on NQ and NAS 100 last week and some just indices futures. And then that's where we'll keep the focus for today. I'm going to bring up some of my TradeZilla, position timing, stuff like that. So you can kind of see like how to plot these positions based on structure and understanding how these markets, the order flow and things work. So just give me 1 second. Let me put this over here really quick. And let's start off on the higher time frame. Okay. So just an idea, just kind of, what we were looking at last week was there was so much manipulation when it comes to, a 4 hour directional play when it comes to the futures and the indices. And the crazy part was is that, we were actually holding buy positions, let's just say on NAS 100 and Q, same thing, to play up into the supply areas here that we have marked, right? And what was crazy is that if you didn't trail your risk on that Friday, right, up into these areas when it pushed up into the 21,900s, that open of that next week was just crazy, right? So we ended up opening. This is where Friday closed was 21,550, and then the market opened at 21,200. Right, so it's about, let's just say, a 250 point drop, all right, to the downside. But where did it fall down into, which was very predictable, I thought, was into the 4 hour demand, right, the 50% of that area. So what we ended up seeing, the first order I'll kind of go over is on the 1 hour and 15. I'll show you how I plot the positions, how they show up on the higher time frame, and how that really matters because like when we take our swing positions and we trail our risk, there's specific things that are happening in the marketplace and the order flow. So I'll kind of keep it short and sweet this time, and then be on the lookout, on the YouTube channel for DRCs, right? So daily recaps of these trades. Like last week, I just didn't have as much time, but this week I'll definitely make time to the trades that we go over. That I'll do a daily recap over these areas. So this will be a little bit faster of a recap. Just give me 1 second. And one thing I would say if you're new to these videos, I talk kind of monotone sometimes. So if you put um, the speed, the playback speed, and like 1.5, sometimes you're gonna get obviously my voice a little bit faster. It's like when I listen to myself personally, when I go back over my live videos, I do that myself. So give me 1 second. Okay, so as you can see, these markets move very similar, right? In a similar fashion, right? When it comes to, people getting in. Now, you're going to look for specific divergences and different things, which I'm not going to go over that today. Just want to kind of keep it very basic and easy on the structure. So it's obviously you can see the week low from last week was, we were bullish for the week. All right. So then when you drop down into we'll use this a little bit later, but when we drop down to a 1 hour and 15, which I'm going to actually pull over here really quick. When you go into a 1 hour and 15, I'm going to show kind of like where I was actually getting in, right? So one of the main things that I'm always focused on swing trades or especially futures trades is where is the overnight trader, right? Where is that trader that, just is so anxious to get into the marketplace that they had to position themselves, around 6 p.m. here, Central Time Zone for me, but whatever time that would be for you is when that market opens. So price overnight, just on Sunday night, right, had come down and set a low around 11 p.m. Central Time Zone and then started to shift in price and push back up. So before I even woke up to look at the charts. London open is right here, 2 a.m. Price is already back to the opening price of the market. Right now, the main thing that makes me, more confident in what we were seeing was that we were also still inside this demand area where we would anticipate from a Fibonacci retracement price to react like this in this way. Right. So by the time the market opens, which I like to, scan and look around like 7 a.m., we already had price pushing, right? Price had already pushed up, made a new high, and had created this expansion imbalance, right, in the 21,100s. So for me, it was pretty easy, not easy to see, but Mondays are, statistically from my data, usually better days for me. But for me, what I was able to see was that, overnight they had already closed higher right here when you look at actual like a line graph. And what I was starting to see was I love to see 1 hour wicks, 15-minute dump candles, and 5 minute, 1 minute mitigations. All right. So those are certain key things I like to see. And I'm also always looking left to see, what kind of liquidity is being grabbed. You want to look for. I was just listening to a video today of a pretty successful trader. We call it the FU candle, but there's a successful trader I heard today call it, a draw on liquidity. Right. And so I'll go over this more on the YouTube channel, like why we look for these certain things. But just for right now, one thing I was really looking for is when you come into the pre-market on Monday, was you already had equal lows and prices have been running up all night long. Right. So price was stuck. Right. And then they created this double bottom engineered liquidity. Now, to me, right, engineered liquidity double bottom is in my head, to me, is like if someone bought overnight inside the accumulation down in here, then what it looks like to me is that they just trailed their risk up, and that's why that level of AKA support, some people call it, right, builds up of liquidity, right? So going into the marketplace, either you're bullish or you're bearish, right? Price is going to go up or it's going to go down, whatever your bias is. But for me personally, right, with that big of a gap, right, that much capitulation. If you don't know what capitulation is, it's 2025. Just literally take your phone and ask Google, right? But capitulation is when people surrender, right? And that's when the market capitulates, it falls, it breaks out. Now, this also can happen to the upside and prices start to fly, right? And like I said, I'll talk more about, matter of fact, let me write a note down here while I'm doing this about order flow, right? Order flow and M's and W's. So give me 1 second. Okay. Okay. So what we were seeing was, pull this up over here, was we were looking for that liquidity, that draw on liquidity, that grab, right? Because before the open, we already had like the New York Open was here, price flew up and showed people, okay, that's why a lot of buyers come in, or London, right? Price came in, they flew that price up, taking out the internal, the HOD for the day at the current moment, right? And so when they did that, that's a draw on liquidity, right? And then they went down to the areas that we love to look for. Now, what I seen was at 8:30, let's see here, 8:31, we ended up taking the buy off of this area up and taking our profits right there. So I'll kind of show what that was. And this is why the day was short-lived on futures, but it was a beautiful long position for our CFD later on at 9:15. I'll explain why inside the dump. But this is kind of like what the position looked like here. Let me see if I can pull it up here. Okay, so when we got into this position, just want to show what this looked like on a 5 and a 15. Okay, so on a 5 and a 15, what this actually looked like, right? Now, a lot of people get trapped in what they can see, right? So when price is doing one thing, or breakout traders are also going to come in this area, that's what's happening in this area, right? So I like to see these certain things happening. Now, for us, what we ended up seeing here was we had the 15-minute dump candle. We had a 5 minute, draw on liquidity because they ended up pushing into those equal lows. And then this candle was very tough to read at 9:15, but that price we ended up taking that, like I said, on CFD. But the the New York price that we ended up taking, Sorry, I got to thinking about two different trades. That's the whole week last week, which I'll explain at the end too. But New York Open was here, right? And so this is Monday's trade, right? Price opens at New York, and what we ended up finding, I think it was on a 1 minute. Let's see here, because I took a trade at 8:31. So let's see here. Let me make sure we're on the right one. Does kick back that data, I'm pretty sure. It's not too far back. Okay, cool. So this was the area that we were looking for, right? We didn't have this price printed yet that you can see that slides off to the downside. We were just right here, right? So 8:30, this is the 1 minute candle. This candle was printing down into the area of 21,200, which was below market open. And the only liquidity that we had open was that massive equal low. But what happens is sometimes people get so scared away from this because it's like, oh, it's equal lows, right? That they don't want to play the area to where they need to just capture the liquidity, right? So when we found this position, we found a favorable R&R. I think a lot of traders are getting, bit because they're trying to win the whole day, right? You're looking to capture, I would say on an NQ trade about 70 points, right? So we entered at 8:31. So this would have been right in here. Price came in here, we entered right off that candle and we put our risk right in that area. Now people would say that's crazy, right? But if you know how to manage, like I said, once you see the clear on the HOD, at this point, there's a certain way to manage that trade. Now, in that same sense, right, it's not always going to be exactly what you want, but that was about 100 points, and our risk obviously was not 58 points, right? Our risk was inside the 20 point range, right? And then so it really condensed down to something like this, right? We were looking for about 40 to 70 points, risking 20 points in that situation, and price rallied in our favor. Now, as price rallied in our favor, made the higher high, higher low, pushes up here, we started to condense that trade down by moving the risk up as it was giving more and more, right? So it ended up being a shorter day just because of the fact that we got in inside, like I said, the 20 entry was 21,222. And then the exit on that trade was inside the 75 area. So it wasn't really that crazy of a day, but it still ended up playing out to be a win to start the week. And then we were able to find, like I said, that CFD position a little bit later in the day. So let me see if it has it on here just to kind of show it. So that position, like I said, was right in here, took the HOD, and then we were able to trail that risk up based on that imbalance that was created right in that 275 area, and that was our exit. So that was Monday. So I don't want to, spend too much crazy time on Monday, but that was pretty much what the trade looked like. When you go back in the TradeZella as well, and you go to the 5 minute play here, let's see if it's going to have that data here. And so let's see here. And so we had already, like I said, we had already entered inside this area, right? Like I said, 8:31, 222. Exit was in the 21, 275s at 8:40. Short trade, right? But the whole goal, like I said, was to, be able to get into this trade like we did and then be able to protect ourselves, and we were able to do that. So going back to the next day, just kind of show you guys that was our first position, right? So just kind of want to build you guys into how to plot the position now. All right, so that was our first position. So let's go back here. And we're going to plot that position now. So let's go right here. We want it to show up on all the windows because I want to show the daily and the 4 hour as well, so you can see what that fractalization looks like. But we took that position right in here. So it was 222s. And then price, we ended up getting out in the 275s above the HOD, right? So that was our first position. Now, when I later in that day, I took a CFD position inside that 9:15 time, inside when they actually came back and like destroyed those double bottom lows. And we ended up, that was our first plotted, position. Price ran in our favor almost what 100, 200 points. We were able to trail our risk and then basically partial out some of that position. And that was our first plotted position that we were able to leave on the board, right? Now, let's fast forward just really quickly, right? Now that was our first plotted position. We won our futures position, right? And so we're looking at our swing positions and we're starting to evaluate where do we want to trail that risk. Now to secure the bag, a lot of times I like to use the top end of the imbalance. So I was looking at like once this one ran in our favor, we partial out. The day ended right here, and then when the day opened, price ran back up again, right? So this was the last candle of that day, right? And then the open was like a gap up, which was crazy, right? Then overnight, so this is going into Tuesday, right? Price trickles back down to where? Inside the imbalance, right? This is like a story on the 1 hour, 4 hour, right? And so it trickles back down to the imbalance. And what that essentially does, I think, to those trailing trades on like CFD, right? Because those are double bottoms right there, is that that's where people are trailing their risk to, right? So that's creating support, it's creating liquidity, right? A huge bank of, people that are in profit that are trailing their risk. So overnight, what do? They short that price off to take back all those people who pretty much bought inside this area, right? And then they start to overnight around like 2 a.m. London Open, right? The times that we should be looking, they start to build that price up, right? So they already set the spring low, right? Overnight, right? We've seen that. They set the spring low overnight. So what did we do on Tuesday, right? To go back into the price here and just kind of look at like how it was like all working out is overnight price you always going to have, very typical targets, I believe, in the marketplace, right? It's going to be, your high of day, your low of day. Those are some of my typical targets in intraday trading. Like I said, give me one other second. I want to take a note here really quick. And so this was already my target. You got to think about it. Most people don't even understand the easy concept of trading as buy low, sell high, right? So the concept really makes sense when you mark the areas, right? This would have been the high of this day, right? Tuesday, this would have been the high of the day. Now, as you come into from after overnight and you have all this sell pressure from overnight, what do you expect people to do, right? Do you think people should, come in here like after you think it buy low and sell high? And like, let's say this is like half of the day. This is the whole day right here, right? So you have the whole day, all this right here. And so buy low, sell high. This is literally where the day starts. So where's low and where's high? Well, let's just say we took it from right here, right? So why would you sell anything, right? After this point here, right? Why would you sell anything really even after this point here? Like, because it doesn't make sense. You're selling low and that would be wrong, right? So essentially, now you go into the next day. New York Open happens, and what I seen before the Open that really got my eye was this candle right here, right? You had the 5:45 to 6 a.m. candle that had been set, and then price extended higher, showing signs of strength. Now, when you had the New York Open, you had a lot of people that were, making decisions that day that were it was very confusing. But if you're looking at the higher time frame and you have an objective of where you're trying to get to, it made a lot of sense, right? So you had a HOD which was here on the 1 hour, and then you had your 4 hour supply area that we were really looking for to be a target. Now, really quickly, I just want to show this as well. Is the higher time frames matter, right? The daily locations of supply demand are probably the most important things in trading. And I thought last week, I've been trading this for quite some time. I thought last week was really crazy because we seen a nice accumulation and rally up to attack, looking left candles and places of liquidity here. But the crazy thing was how they gapped the price down into the candle you should be keeping your eyes on, right? And then started to accumulate to make, this bullish week that we ended up having back into the supply candle here. And so that's where my mind is, right? When I'm looking at a higher time frame, is I'm looking at supply demand. I'm looking at where the bigger players are going to be wicking into the areas, creating those fast, mitigation mantras to then, reverse on the masses. All right. So we'll talk more about higher time frames at a different time, but that's kind of where my mindset as I'm plotting these positions is at. And so, like I said, back to where we were at, we were inside of Tuesday here. And let's go back right here. Right, this is Tuesday, like I said, and what we were, oh, excuse me, wrong data. So Tuesday, like I was saying, and so we had that down candle from 5:45 into 6 a.m. And then what I was looking at that was really making sense to me was that we had already had the wick created, right? This was that wick created into the right area. You have a demand candle that, obviously was, not even touched, but was respected. And so price is really, to me, I don't really I look at the wicks, but I also focus on where the bodies close, right? Because that's what sets the accumulation or the distribution, right? So for me, price, overnight had set the low. It had fell from, 21,600 down to 21,300. So that was alone 300 points, and then add the 50, right? So 350, almost 400 points fall overnight. And then you start to see, like I said, the signs of strength, going into London, and London comes open, you have new signs of strength. And then right before pre-New York, we had, a massive sign of strength right here. And then price kind of pulls back. And then where do we have New York open? Right here. All right. So this was New York open right here. And if I go in there and I show you guys that position on a smaller time frame, let me make sure that was on TradeZilla, what time we took that. So we had 4 winning days, and then we had that, just a little capitulation and mindset on that day of Friday. But we took this trade at 8:33, so we'll kind of dive into that and look at this really quickly and plot that position as well. Um, and so a lot of the futures positions I took a little, I would say aggressively and quick and was getting in and out. And I'll probably be a lot more patient this next week. We just wanted to start that month off with some, pretty good green days. Let's see here. So this is 8:30. Okay, so we took the trade at looks like 8:30. Let's see here. What time did we take this trade here? February, is this the 4th? Okay. The 4th. NQ data. Make sure this is the 4th. It's not the 4th. Let me go to the 4th, excuse me. Mhm. Okay. Okay. So this was the trade that we took from Tuesday, February 4th. And so for me, I wanted to see continuation, right? I love to attack wicks. They left wicks from 6:40 a.m. So sellers, right, at the 21,500 whole level, right? We'll go over how we grid our charts and stuff as well if you don't know. But like I said, looking at that 21,500 level, looking at how everything was shaping up. Now, I entered this trade, I felt like a little late because I hesitated on the 15-minute play of this because it looked really, really good on a 15.5 all the way down, like looking across. And so my entry was at 8:33. So my entry ended up being plotted right here. And this was after so 8:32 was right here, 8:33, and then I entered at this time right here, and my risk was at this top end of New York, right? So it's like 448, and then my risk was like New York open. And so was looking to get to here to cover, and I wanted to see that 5 minute create that expansion, give me that top end imbalance, and then continue, right? And so that's what we ended up seeing. We ended up taking that trade up, ended up adding into or no, we didn't add into the futures trade. I just rallied that trade up into looks like, let's see here. Rallied this trade above the HOD, and then it kept going right higher, like was opening, more and more bullish, and then ended up getting out, I believe, around here, the 21,600s. Let's see here. Okay, so 840. Yeah, so right when it crossed the HOD, I was out on futures that day. Now, at the same time, right? At this same time, I had taken positions earlier on CFD that day. So we had plotted positions around this a similar same area. And so now we have positions there, and we have positions essentially like here at like 21,400. And so we're trying to track this thing up, right, on that 4 hour, right, back into that supply area, right? That was like our goal of the week. So that's kind of how we've this, from Monday to Tuesday, that's how everything has looked, right? And so let's go to 1 hour now. So that's kind of what everything's looking like for the shape of the week. And now, right, this was Tuesday's the end, right? So after that HOD is taken, that's where I like to grab, like when liquidity is being grabbed, that's where I like to be getting out or trailing my wrist to secure the bag. So what ended up happening in this situation here is we took the trade right in here. Price ended up crossing that HOD, gave us the candle right here, 9:15 a.m. And then they gave us 9:15 to 9:30. Then they gave us 9:30 to 9:45, right? So at this moment right here, I had trailed my risk on that trade I took here to that area right there, the top end of the imbalance, right, for my futures position that day. And so really, really good day, even though it sold off, like that was perfect because they expected value. And like I said, capturing from like, let's just say the 440s up to the 615s, like that in that area, like right at this low, was a really, really good capture for that day. Now, we're thinking about this from a long-term perspective. We're thinking about this from swing trades, right, as well. Now, the trades I had on the swing trade from Monday, right, how I trail my risk, right, you have to look at the CFD pricing for yourself. But when this price goes up, makes the new high, set this low, never came into here, and then closed higher than here, that trailing risk for me, right, depending on how you have it set up, but for like the most meat and potatoes of the position, I start to move it to the new to the LOD, right, of the current day that I'm trading. So price makes that new high, you can take your trailing risk and move it to the new current LOD, right? Because now if you look into, how the rest of this week goes, right? Now we're going to look into Wednesday, right? So what happens on Wednesday? This is the open of Wednesday right here, right? So if you can see it here on the 1 hour, what do? Overnight price, they trail back and they take back the traders that played the expansion late. So most traders are playing late, right? They're not going to be inside the supply demand, right? Inside accumulation distribution. They're going to be playing when prices are flying up and they're themselves, they're going to be playing when they're flying down. They're just with that, right? Nothing wrong with it. You can find profitability, but it's just you're taking on more heat. So overnight price going into Wednesday starts to sell back into where? The demand, 21,450, right? Inside the accumulation, right? I used to mark this stuff up like crazy, but my head pretty much sees it, but I'm gonna do it for you guys. This is a accumulation, right? I like to look at the body closures of the candles, right? Wicks or targets. And so when you look at how they push price overnight, you only can think, right? Two things. There's double tops and double bottoms are our favorite targets. And for right now, we're making higher highs, higher highs, and higher lows, right? Overnight price failed to go lower than the demand area, 21,450, 21,400 whole level, and starts to, take a different stride by 6 a.m. So what did we end up doing here? Um, this was a really testy day, I remember, but I remember I won't go over the exact entry on this one. You can watch the YouTube video. I know I posted it, but this was a day where you have to trust a target, right? When you have a target in an uptrending market, right, double tops like this, what you're thinking is there's so many things happening, right? The people that are short from the supply area, right, from last Friday, right? They've trailed their risk down to this area, which is creating resistance, aka liquidity, right? And so now what you have is people who are getting butt cheek tight on one side and the other side, they're starting to win and win and win, right? And so for me, this was an easy target. Now I'll have to go over mitigation mantras another time, but I know by looking at a 1 hour, if I'm getting a 1 hour wick, and a 15-minute wick, I need to look for a 5 minute dump candle and a 1 minute mitigation under opening price theory, right? And once I have that area locked and I go 1 to 2 and 5 minutes starts to show me signs of strength, I can trail the risk accordingly, right? Now, we ended up getting this target. We played below 2025 open, which was really important as well for swing positions, right? Long-term positions as things as well, right? So we're thinking about more than just intraday trading here, right? Because we're not just trading one way. And so as we continue to do that, you're also thinking, how to use your Fibonacci retracement tool, from this swing high to the current low of the week, right? Price is starting to get, it's starting to really retrace from that point, right? And so this is kind of what we're thinking. We have this trade, we see the liquidity. Now you can be a little bit more, you can have, it depends on where you got that CFD position, but I like to keep my risk under the low of where the area I got. So once it pushed up in here, you've got to have enough volume on the trade to partial out and then to be able to put your risk and place it and be able to accept that risk, right? And so we ended up doing that, right? Because we ended up playing it. Like I said, the CFD position was a little bit earlier. It was like somewhere in here around like 7:30 a.m. And so we had this, and our stop loss was definitely in a good spot. And price came down overnight, started to do this. We bought that New York price, went up and made that new high, closing the candle, showing us signs of strength. And so where does that trailing risk go for your CFD? To the new low of day, right, of the area being broken. Simple. All right. So I'm hoping this is helping you guys out and like seeing how to trail your risk as well, um, for those CFD positions, as well as taking intraday positions and understanding higher time frame to get those positions. Right. So that was Wednesday, right? Now, as we go into Thursday, right, we had clearly broken a level of resistance, aka just liquidity, and we've made a new level of probably of support unless unless they show otherwise, right? So as you go into this price here, what I personally look for, guys, is the body candles on the body closures on the candles. All right, so overnight, 4 a.m., they had a level of demand, but it was above where they had already broken out, right? So when price ran up to here, most people are going to get faked out, right? But to me, what I'm looking for, if I'm going to see real shorts in the market, especially on futures, is I'm going to see those swing positions take profit, right? Because, like I said, we'll talk about order flow again some other time. But, when a buyer takes profit, there's certain things that happen that would make me want to short the market, if that makes sense. So, if you've got long positions, right, and you don't see people from the keys that you have, you don't see people taking profit on their buys, then there's no such thing as the short going to come down, right? If that makes sense. So fast forward into, like I said, this price, we had that level of demand. And then what happened was that New York Open was right in here. We ended up playing a very similar play, right? It was easy. It was an HOD play, right? The liquidity was set right there in that area. So you can see it. It was like right here. We ended up playing the test down into the demands of 21,750s. And then we ended up exiting and giving our orders back to somebody playing a buy up in here. Who would do that? Who would do that at that point? I can tell you on people that would. It's gonna be Top Step, right? And that's what really helps me, guys. You gotta find rich retail and you gotta find ego retail, right? Rich retail and ego retail, and you gotta be able to use those to your advantage. All right. So that was our positions, right? You'll have to go back. You can watch like I said, the replays and see, but how we ended up taking these positions in here and was able to hold for a profit and get out. Okay. And then the CFD position came later in the day. I believe it was after the release around one. And so most people, right, noobs buy tops and sell bottoms. And what had happened was they pushed the price fast down to go basically attack that low again, right at that 130 time. People started panicking, and what they do is they sell right here, right? They try to go take this low and they try to sell and they're way too late, right? And that's where I say noobs buy tops and sell bottoms. So what did price do as it got into this area? Right, it turns up and buys. We ended up putting a CFD position on. One of me and my good friend, I believe it was Jaden, was on a call together, and we ended up putting a buy in this position when it was capitulating out on CFD. Right, so that price was here, and so let me do this here really quick. That price was here, and it was kind of plotted like this. All right, and we had already finished our futures position that day, so there was nothing else, right? So they never broke that low of demand, right? Found the CFD position and was able to, it wasn't very much crazy volume because we already have positions, right? But as soon as it made this new high, those other positions now can start to trail up, right? And I think that's what really saved me last week on the CFDs was that when this price made this extension up and I had took that position at the end of Thursday, I trailed all the risk to this area, 21,700, right? And the reason being is because we were coming into the 4 hour and the daily supply, right? We were pulling back on that range tremendously. And so you got to think taking, right? There's no such thing as shorts in my mind. It's just someone buying a higher order. That's it, right? And if they do it at the wrong time, this is what can happen to them. And it happens to all of us, right? So that was Thursday, right? CFD, we had already bodied the first HOD blast with futures, right? Now, most of the risk is all right here coming into Friday. So what do you expect? People say, "Oh, it's sold off. I'm a genius." No, dude, it's just people profit taking on the position. Right? Now, I was so mentally drained, I think, by Friday from having a 4 day heater of wins. And I already had a really, really good amount on CFD that had bodied up for the week. That I did make a mistake, which, like I said, you can go back and look at, but it's part of the game, right? Wasn't too crazy. It's just, was just getting too frantic-y and just was honestly tired of trading. But I hope this kind of helps you guys see, what happens. I can kind of go over that as well. Honestly, we had the trade. I just shook myself out of it, like I said. When you really look at it, so we went over every day. Now we'll finish with Friday. In this area right here, if you guys go back over the stream, it's the same stuff I talk about all the time, right? Now, the one thing I didn't notice because I was looking at CFD data and I was looking at um futures data is I didn't see the wick pierce the 4 hour area like this. You guys, if you go in and really see it actually um just does about like a tick or something, right? Because if you go over this candle, like these are open, high, low, close, right? So if you go over this candle, the high on it was 21,966, right? Flat. The high on this candle here was 21,968. So by 2 points, it's very small, it's very minuscule and hard to see, but I was looking at too much data that day, and then I had the shorts at 9, I believe it was, or no, it wasn't 9:15 that day, it was on Tuesday. But we had the shorts in the 21,950s, and I placed the risk here, had everything good, and I didn't think it was going to be the trade for some reason, just psyched myself out too much trading, right? So, but long story short, 1 hour wick, 15-minute fast up candle, 5-minute fast up candle, play the right side, right? Attack LOD. It was our typical order, and then you had a massive target from the trailing risk of all the players from the week, right? So all those players from the week essentially is what I'm basically thinking, right? Based on the positions that I personally had, right? That most of their risk by the from Monday was trailed to this spot, right? And that would have still secured you a nice bag if you didn't go to the actual LOD of this day when they started pushing higher here, because then that's what some people can do as well. They'll just push it to that next LOD, right? But for me, I had moved it to where the double bottom area was because I was like, if they can't break this candle here from 1 p.m. on Thursday, then there's no way the structure goes lower to attack these buyers, right? Essentially, these buyers taking profit and the sell orders getting filled, if that makes sense. So, um, going into next week, because I kind of went over everything from last week, I think Monday through Friday, right? Going into next week, like I said, we're in a really choppy area, right? When you look at the 4 hour and you look at the 1 hours. So, what I can see is probably some of these people in this range, especially when you look at this on a 4 hour, if they have swing positions, possibly taking profit some more on those positions and we come back down into maybe those 21,300s, maybe just slip these 21 fours. But we'll see how they play under 2025 Open. I think 2025 Open being there for NQ 21,532s inside that demand will be a good area to see if they're going to, have any kind of bounce, or will we see more buyers, right, take profit on positions that will make those sell orders be filled. All right. So I hope that does help out. Let me think. Is there anything else I kind of wanted to go over? Um, That's going to be it. There wasn't too much, looking into next week other than, we might see that price kind of start to fall off. Let me see here. So yeah, that's pretty much going to be it for this video. Like I said, I hope this provided value. Make sure you join the free Telegram. We will be having a Discord rolling out here soon, and as well as a couple other things that I'm working on. So I appreciate you guys. Like I said, I hope this is something that can provide value. And if you think of anything that can add more to it, or can answer some more questions, just personally DM me or reach out, and I'll do my best to uh, incorporate that into the streams. But with that being said, you guys have a great rest of your week. Trade safe, and I hope you guys kill it this week.